Hey, what's going on, guys? So coming back to you with another week of trades. Let me go ahead and get the screen back up there. There we go. So what's going on, guys? Coming back to you with another week of trades and trading. Just want to be able to kind of do a quick market check down before the week starts. So you guys have something to run off of for the week. Again, this is not going to be too long, but I want to start with a few things. Again, we'll talk a little bit about the Discord, and then we'll jump into the charts. So let me share this right here. So you should be seeing my back end Discord. So last week we had a pretty good week on the Discord. Um, Again, we were able to basically take out um, a few winning trades last week, and um, let's break this down. So let's go to, again, just looking at the back end, there was a few big plays that we called out last week. Again, things started off last Monday with this reversal. Again, the market ran up, took out the Asian highs, I believe, and pretty much ran towards our target, which was our first exit here at 3060. Ended up taking out 200 points, about 200 points on NASDAQ there. The second trade was essentially, something where we caught this early prior to market open. Um, Again, for another 250 points. Again, I am trading with like 5 contracts on Nasdaq right now, just because, or micro contracts on Nasdaq, just because I've had some really big weeks, and going into the end of the month, and just from a psychology perspective, what I try to do is just like have, um, I try to basically kind of lower the risk of me blowing my account or doing something crazy and taking a setback. Especially when you think about the psychological elements and the emotional elements of you having a pretty good week. I'd say like this past month, it's been about a 10 or 11K month for me, which is pretty, which is decent. And that's consisted of like two. It's actually probably been a little bit more than that, but it's consisted of 2 weeks where it's been at least 5K each week. Um, in addition to some other weeks as well. So it's probably actually more than that. Probably decently more than that now that I think about it. I got to check the exact numbers, but because of that, what I try not to do is give money back, because what happens is your brain, once you have a big week, your brain kind of adjusts to having that week. And sometimes that week is something that's expected. And sometimes that week is something that is just the cards fell in the right place. And, the thing that I don't want to do is give back money into the markets. Right. And so a lot of times when I have a big week, I kind of temper myself off and taper it by reducing the amount of contracts that I can play with. Again, especially if there's a huge news release that comes out as well that week. So yeah, so basically the last couple weeks I've only been trading with 5 contracts and micros, and so even with that, was able to pop off a 5K week or 6K week actually, um, going into Friday. So the other thing that I'm doing is to temper the psychology aspects of things. Again, everybody understands that tilt happens, right? And I've said this a billion times, like tilt is going to happen to you as a trader. You're human, you're experiencing emotions up and down. You're going to have days where you win a lot, you're going to have days where you lose, right? And so in those losing days, you got to be able to protect yourself. And so the lot size, or the contract size, is one thing that I do, but I also have gotten the habit of withdrawing all the profits, right? And so, in the past, maybe I would have taken like a 10K count up to like 30K, 40K, and then give a portion of that back because, I was on a high, or, maybe there's a day where I didn't manage my emotions correctly, and manage the charts correctly. And so with that being said, one of the things that I've done and do now is really just make sure that I'm withdrawing all the profits that I'm taking into account. And so let's say my starting balance is 10K. If I'm up 500 in the trade for the day, withdraw it. If I'm up 1,000, cool, right? And so anything over that 10K starting balance is what I'm pulling. Um, there's a certain number in my head that I'm working towards, and withdrawing profits. And once I hit that, then maybe I'll throw another 10 or 20 or 30K on that, right? But um, basically having a baseline number, and anything that goes above that baseline, you withdraw, right? And you do that for a few months until you have a new, a new baseline that you want to work with, and then you withdraw that, right? So again, just protecting your risk from anything, because again, when the money's in your account, in your bank account, right, you can't lose it. Um, so yeah, just that type of thing. So let's go back into the charts. Um, this is not going to be too crazy, but you can see here that over the past month, really dollar's kind of been playing out the way that I thought it was going to. Again, we've been in a huge consolidation. If you look here, this was pretty much a 2 year setup here, a 3 year setup where we ran up, failed to take, come back up to the high, traded into an old fair value gap and fell off. Really failed to stay above that level, right? And then melted. It's kind of where we're at right now. So ideally, I think we are going to continue downward is kind of like the long-term bias here. But I wanted to see the market kind of run up and take a level of buy side liquidity. Again, when we think about the market, again, if it's ICC concepts, these auction market theory markets, right? We're running from levels of buyers to levels of sellers. Right. And so if we're going to continue to run lower, again, we got to think about where the money is at. And the money is above old highs and gaps, etc. So sitting right here, I don't know where the orders are at. I can't see the orders on my chart, but I can work off this logic, right? If the market has orders up here, we're going to potentially run up here to take these. So anytime we have consolidation, it's a power of three drill. Consolidation, manipulation, distribution, and we run lower, right? So you hear me say the same concepts over and over and over again because this is how the market works. The market's not going to change because it runs on money, right? That's the whole point of this. So with that being said, again, I want to see the market run up, take those highs and run lower. Give me 1 second, guys. So yeah, sorry about that. I had to plug in my laptop. So oof, okay, that's too close. So ideally here, what I want to see is the markets again take that high and then run lower. So I'll be watching that, see how we react. Again, additional levels. We don't never, ever really know how high the market could run. It could take this high and melt. It could trade back up to this buy side liquidity here and then melt. It could also run into this gap and melt, right? Not sure, but again, long term, I want to see this continue to go lower. So when it turns around, cool. But until it does, we have to work with the operation. We have to work on a day-to-day basis that it is still going to run higher until proven otherwise. But again, consolidation, manipulation, distribution. Let's switch this up. Let's go to NASDAQ first. So NASDAQ has been interesting the past couple weeks. There's been a lot of really good plays on NASDAQ. From a honestly, a lot of my best trades have come just running and reading NASDAQ and seeing what it's doing. And here we can see here that we're trading. Okay, cool. We'll talk about that in a second. So at a higher time frame level, again, we took out the all-time high that was set back in June, ran up here towards the end of June, failed to stay above. Failed to stay above once, twice, three times, melted, broke structure, by trading through here, inverted this fair value gap. I'm sorry, reclaimed this fair value gap. Again, this was a SIBI that it broke through and then rejected and closed back below. If you look closely, you can see here that the upper end of this break of structure align, or the lower end of this break of structure aligns with that fair value gap. So we wicked up there once, took out the high of Wednesday and going into Thursday, and then melted. And then we're currently retesting this right now. So there's a lot of stuff here that lets me know, that makes me think the market's going to continue to run lower today. And going into next week, we do have this fair value gap that we reclaimed. Again, a reclaimed fair value gap is one that initially sets, right? It works, or maybe it doesn't work. It gets inverted, right? So at that point, we would have inverted this and thought of this market as a inverted fair value gap. Sorry, I'm looking for my... Right, so inverted, right? So once it inverts, obviously we change the colors on this mentally. And my inversion, again, I mark all my gaps, color coordinate them just so I know like what I'm looking at usually. And sometimes like in real time, I fail to do it. But when I mark it on my charts, I tend to do that just so I know what we're at and where we're at. So it inverted here. It also gapped up. So it left a new week opening gap here. So a lot of stuff in this level here. We came back down, tested that, obviously tested the gap, the inverted fair value gap. And then what happened? The market pretty much ran to the high end of that gap. It's crazy how this stuff works because it closed at the high. It tested the high end of this fair value gap, but then closed inside of this new day opening gap. So very strong bearish action, traded back into a secondary imbalance up here, right? A SIBI. So there's a lot of details here that are letting us know the market wants to run lower. Tested consequent, well, a little bit higher than consequent. Tested just about the high end of consequent encroachment there, and then melted, right? So right now we're running into a scenario where the market, if the market wants to go higher, it has to get through this gap, and this gap, and then the broken structure too, right? So that's a lot of quote unquote like resistance, right? So ideally what I want to see happen here today is I want to see the market fall over, respect this order block here. So I'm just going to mark that out. And then I want to see it run over. And I'll be thinking the low of last week is the target. Definitely the low of today. I mean, this is 500 points. That's a lot. Also, mind you, we're in the last week of the month, so we could be experiencing a counter trend week. But I'm not really interested in anything short, anything long, to be honest. So going down to the 4-hour time frame, same idea. I love to see this. We're trading above the Asian highs. Took out the high of Friday. Wouldn't be surprised if we came back up to consequent encroachment again and then just melted. We'll see. But I'm not interested in anything going long at this point in time. Some stuff's got to really happen. We got to start seeing breaks of structures in the daily, the 4-hour time frame, etc. by taking out maybe that high. So bearish action here. With that being said, NASDAQ or YM, again, same place. We have this huge wick sell-off there, trading above those two previous highs, which set the all-time high initially of that swing, and then melted and fell over. So again, same thing here, taking out highs and then running lower. Looking at the low of Friday as a target that we could run to. Let's see what happens. ES, probably the same thing. ES is way cleaner. It's just like NASDAQ. Breaks of structure. So we had this gap here. Again, the inversion of this gap and then reclaiming it. We also have that gap there. You can see that this daily new, I'm going to call it the new week opening gap again. And these levels are important because the market tends to revisit them because, again, people put their orders around these levels. So we trade up to consequent encroachment. The gap, respect consequent encroachment. Unlike the other gap, unlike the NASDAQ play, we failed to actually take out the high and trade back into that imbalance. But it doesn't matter because it respects consequent encroachment. Crazy how this consequent encroachment lines up pretty much on point with this one. Again, that's probably random. Um, so again, we're trading back into this order block here, and we've already taken out the high of Friday. So ideally, I'd love to see this continue to run lower. We'll see what happens. Let's go to Euro. Actually, I'm going to draw this out. So just so you guys can see again, what I want to see happen here is this. We've taken out the high of Friday already. So maybe we'll run the high, our current daily high one more time, and then melt would be an ideal scenario. And I'm looking at, again, long-term play down here. I would love to see the market trade to the low of the day, a low of Friday. And yeah, do something like that. So I'll be looking for that on the smaller time frames to see if we get a good play or trade there. If not, oh well. Let's look at Euro. I have not looked at currencies much, but I would imagine they're lining up very similar. So a couple weeks ago, we said that we wanted to see if the market would respect this gap, this daily gap, and then run lower. We did. So initially, we traded above the high of a few weeks ago and then melted. We took sell side here. Euro did not. Dollar did not take its level of buy side on that day, but Euro did already. So that could be a sign that we're done for where we got hit to, or we could continue to run lower. Right? I could see us running down to here. Take a sell side here. So I don't think, the way that this set up, I don't think we're done. That's a long time forming that run. And we could consolidate and chop and go right back up. But one level, one run, two runs, three runs, we chop around, we form the gap, we run lower. That's a pretty big thing there. So again, YM is just running highs. I'm not even looking at YM because this is not doing exactly what the other two are doing. But again, noticing the fact that we did take out the all-time high and run lower. So I'll look at gold really quickly. And that's all I'm really going to be focusing on. Again, gold should be aligning a lot with like what Euro is doing. So usually if we see gold, and if you think about Forex pairs, gold is XAU USD and Euro is Euro USD. So the USD in the secondary lets me know that the market wants to continue to run lower. So today we actually had a strong rejection from the midnight open. So you can see here, markets failed to stay above midnight and then ran lower after taking out the low already, and then take out the low again. So keeping in mind that this high of the day is still open. If I go to Euro, it's a little bit of the opposite. So we take out the lows. These are actually moving in differentiation. And honestly, I wouldn't trust Euro because if dollar's going higher, no, it's going lower. Actually, I would trust Euro. So actually, I probably would stay away from gold today because of that. But long term, again, the market's bearish, so I want to see the market run lower. Potentially turning into that old imbalance right there. That's what I would be looking at. So again, my eyes are going to be most focused on NASDAQ. Again, it's just moving right now and has the best kind of levels there. So I wouldn't be surprised if we took out potentially the high of Thursday. I'm looking at the high of Thursday, the high of Friday. I don't think we'll get that far. We could even run up to the high of right there. So this is the New York high for Yeah, the New York high for Thursday. But again, could be looking there. It lines up with a pivot point or a standard deviation level. So, but again, this is fair game. The trading of the high of Friday. Ultimately, to run lower, you see the market tend to wick off the midnight open there. So, what I would love to see, best case scenarios, which since we're trading over the high of the day, I'd love to see us get to 930, take out whatever is the current previous high, or since that high is already trading above it. So whatever's the current previous high of the London session or the pre New York session, so that 830, 830 to 930 range. Run up there one more time at 930, start to run lower. And even from here to here to the low of the day, that's 400 points. So that could be an amazing setup right there. So ideally, there's a couple good plays. There's a couple of good things I think could happen before the end of the month. I'm gonna look at Forex Factor really quickly so we can take a look at what's going on for the week and then call it. No red news today, so this could be a safe day. Again, I try not to trade on Monday because of counter trends, but if there's a really good setup, I'll take it. GDP for Canada on Tuesday, it's not really going to affect us. And then we have the most important thing. This is the FOMC. So not only is this, the FOMC for this month, but it also is the first FOMC where Jerome Powell is no longer the Fed chair. So I have no idea what to expect. I think Jerome Powell has been in with the markets for like years. I think it was 2011 when he started, 2018. So this is actually, I don't really remember how it was when he came into office, but it could be volatile because of that. So yeah, so not really sure. Not sure what to expect, but I also don't want to be in the markets around that time anyway. So I'll probably be done on Wednesday. Going into Thursday, I mean, we have non-farm. So this is a shitty week. So non-farm and FOMC on the same week. And then Friday, we're done. So I'm definitely going to call it a week early this week. And if there's nothing here, then I'm not going to trade. So the best thing that you want to do at the end of the month is not give away and give back profits. So call it a good month and let the be back next week. So that's all I got for you guys. Again, if you value this, please hop in the Discord if you're not in the Discord already. And yeah, we'll go from there. So peace.